Hello, this is the Chart Profit webcast. Friday, 4th of September, we're about 3.5 hours into the trading day. Going to review the levels that we looked at on Wednesday and see how the market's responded to those resistance levels and support levels. First of all, this is just looking at Dow 2015 so far. This is a 5-year. It ends in a 2015. Typically 5 years in the decade cycle are extremely strong. This one probably the most disappointing so far on record. Certain similarity in recent activity to 1975, another 5-year. It's typically strong at the start of the year. We were coming out from bear market at that point. It's a strong rally. This topped at mid-July, and then there was a sell-off which ended very early October. So the first move of the sell-off was from mid-July down to August the 21st. This year we've seen the sell-off from July the 16th roughly down to August the 25th. 75 went like this. There was a little rally back into early September, and then another decline which tested that previous low, and that was on October the 1st. We rallied for the rest of the year. Here's the two charts together. 75 at the top, 2015 at the bottom. Just a thought, the current weakness we're seeing in the market, obviously a retest of this low is possible. We are seeing some extreme bearish sentiment, which I'll discuss in a second. So there may be a low in the offing. Currently the price, momentum, the breadth are all still weak, as we've discussed. And major indices seem at the moment not capable of climbing above the obvious resistance level, so we'll look at that. First of all, on the minor time frame, we're looking here at the E-mini S&P from today's pre-open. Major resistance on this chart is 1978.50, which is up here. That's the halfway point of the high, this year's high. And the major support is 1870. That's formally the major point of control down here. And within that, we have minor resistance at 1932. That's the 20-day point of control. That's here. And minor support, the half range off the recent low at 1912. And that's here. Here's the day's action on the E-mini. Started the day just pre-open with a test of that 1912 minor half range support level. We've bounced back. Here's 1932, which is currently the minor resistance. And if we look at the E-mini in the bigger time frame, here's the point of control that was tested in August, and we bounced back pretty quickly. And here's that half range. If you are looking to buy, you should be cautious unless we can print some time up above this half range level, which seems at the moment it's going to be tough. So here's the spider. We've had this half range on all the charts marked clearly, and this week that was resistance at this point. And if you remember, I've said many times, and I've said recently, we have to monitor these levels carefully. Very often in a really bearish market, the first major rally will fail at the halfway point. So there it is. So again, at current levels, we could see a retest, we could see markets low, and we can look for something down here. But at current levels, you want to see price up here before you're looking at position long trades. As you know, price below 187.80 on the spider, really weak price location. On the Russell 2000 ETF, I said this is a key chart, and this level here, 116, the major point of control, is a key level, and that's the high of the week just here, and that's a weak response. Price below 111.50 down here would suggest a retest. As you know, I don't put too much importance on the technical oscillators, but we've got here a stochastic momentum index on this daily chart for the Russell 2000. Chart appears to be responding pretty well to that. We'll sell it down here. It gives a buy indication back there, sell indication there, buy, sell here, buy here. So market seems to be in that sort of mood at the moment, and this is a little ominous. Here's the diamonds, failed just below the half range here, and we're on this chart back below its point of control at 164.24, so this is weak price location. Just look back into last week's ebook, just on what I call the weekly structure. We mark each week separately and just define it in terms of sellers or buyers active and whether they're effective. Here was sellers active, and by definition effective. We saw the shape of the week lower Friday close below Monday to Wednesday's range. That's sellers active, and the weekly bar was lower, so it's effective. Last week we had buyers active pretty much all week from the Monday, that big decline and then the climb back, but the bar as a whole was lower, so it's ineffective. And just on this time frame, I was looking for something better than we've got this week. I was looking for more price action up like this, buyers effective, and we haven't seen that at all. Just look at the market chart for New York. These bottom two indicators need to improve. Breadth is still not supportive. It gives us this continuation of this red area on the breadth, and price momentum still very poor. Just a quick look where Europe closed. This is a FTSE 100 index, closed towards the low of the week here. Traced about a third of the decline at this point. 58.70 is a really important major point of control, so that should be big support as it was here, just a probe and then a bounce back. Price down here, not good. Similar level on the German DAX, 93.07 is the major point of control here. Again, couldn't manage a halfway retracement and close here towards the lower part of the weekly range. On the sentiment, we're looking here in the pre-open, talking about the RIDEX assets ratio. It was slightly lower, back to where it was earlier in the week at 4.23. That's the lowest level since October 2013. You can see it here on the chart. And here's the previous time we were this low in the ratio. And that represents quite a decline from this extreme level up here at 14, which was up around the high in the market. Relatively extremely low now. That's quite a decline, and some of the sentiment readings are getting extremely low, indicating lots of bears to the point where we should be anticipating a low at some point. Big spike up here as well in the money market assets fund from RIDEX. You can see this spike here, previous spikes here, here in money market funds assets. Usually indicate lows. These, of course, in this ongoing bull market, and the question we have to ask is: this price action terminated that bull trend, and are we into something new here? You see the following charts in the ebook on Monday. This is the public poll from AAII. Not particularly much of a change here, but in the Investors Intelligence poll, we've seen a bit of capitulation here this week. The bulls percentage was lower at 27.8. That's the lowest since March 2009. That was the low of the previous bear market. So they are as bearish now as they were at the low of the bear market. Bears percent was higher at 26.8. That's the highest since 2011. And the net, that's the bulls minus the bears at 1. That's the lowest since October 2011. And this 4-week moving average of that net figure in yellow that I follow, it's often a good indication when it takes out previous extreme low readings, which it has done. It's at 12.75. That's the lowest since November 2012, back over here. So it's extremely low, this 4-week moving average, not as low as it has been. There was a big increase in bears in this poll this week. We've also seen that kind of capitulation in the exposure index, which measures current equity exposure of active money managers, and that was lower at 23.85 this week. And when this reading gets down below 30, as it has done here, usually indicates a low of some degree or a low coming. Seems unlikely we'll see that October low in this indicator tested, but why not? And taking out previous extreme lows is often, on this indicator as well, a really good indicator of overdone pessimism. We're not quite there yet. Just want to quickly look at bonds. We've had a shift in one of these levels. 6-month point of control has shifted to 122.50, which is this line here. We're just currently printing just above that level, and the halfway point of the June low comes in here. So early next week, if TLT can hold above 122.50, could see a rally back up to retest that halfway point, this level to this level. We'll just look quickly at the dollar index here. I'm going to leave the rest of the currencies and the commodities until probably Tuesday to have a closer look. Dollar index is still finding resistance here as it did yesterday at the halfway point from this high to this low. That's the obvious resistance, but it is sitting in a stronger position. It's made what looks like a higher low on this 12-month point of control. That can be a bullish pattern. If we see the same kind of thing here, that would be a springboard for higher dollar. So we'll review that on Tuesday in a short webcast, along with the other Forex charts and the commodities. Okay, that concludes. Thanks for watching.